All right, all right. We're live, I think. I hope.
I believe.
Welcome, I believe. Welcome, everyone. It's actually going to be just me and Maxim today. Brian is off at a wedding, so we hope he's having fun. But that means you're stuck with me for today. Still, I think
have
we'll.
to bear with you.
Yeah, bear with me. But I think I'm gonna. I've prepared enough interesting material for you guys not to click away. So we'll see. As usual, if you're new to the stream, welcome. This Week in Crypto is a weekly market stream that we at Santiment do every Friday at 4 p.m. Central Eastern Time. What we do is in the next I want to say like 30 to 40 minutes, we're going to be talking about what's been going on with the market over the last week, especially with Bitcoin and Ethereum. There's a lot of interesting metrics that we want to go over today. And then afterwards, we are going to be taking audience questions. So if you have specific assets, coins that you are interested in, you're probably down this week. I'm sorry about that. Everybody's in pain. But if you have interesting or just general coins that you would like us to take a closer look into from a perspective of our own metrics, on-chain data, social data, development activity, and other angles, let us know in chat, and we'll get to that at the end of the stream. Now, first order of business, Max, can you see my screen? Okay, good. Just wanted to make sure before I continue. Okay, I think I've posted the announcement on all channels. So I'm going to do Brian's job as far as the beginning of the stream and talking about what happened over the last week. And this is essentially the week in a picture. So here I'm using our screener, which allows you to filter out all of the assets on our platform by a specific criteria. So I've used only, or I'm currently looking at only the assets that have more than $100 million market cap. That still leaves us with about 300 coins, which I think is more than enough as a reference point to what's been going on with the market. As you can see, it's been painted red over the last 7 days, which sucks because Monday was in fact a very good day for Bitcoin. And I wrote an article about why I believe that Monday was such a successful bounce back for BTC. I'm going to get into that in a moment. But overall, we're still quite in a sort of pain environment, in a capitulation environment by some metrics. And in general, there seems to be a growing amount of uncertainty even still. So before I get into talking about why I believe, we're going to start by talking about what happened on Monday. And then we're going to sort of segue into how that's changed since Monday. But before I get into that, Max, I know you wanted to talk to the audience today a bit. You were away last week and you had some fresh ideas about the market. And let's not forget that 2 weeks ago you said that everything was going to crash. And then Elon and China helped you with your prediction, but still you were kind of on point. So do you want to do that now or do you want to do it later?
Let me prepare because we changed our dev updated layouts. I need to create a few of them, and you go maybe 5 minutes, then you can.
Sure. All right.
5 or 10, yeah.
No worries. I have a lot of stuff prepared anyway. By the way, I had a few people asking me about discount codes for Sandbase. So if those people are already here, I don't want to have them wait until the end of the stream. Max, if you want to quickly flash out the discount code for the stream. So anybody that watches this stream probably knows TWIC, which stands for This Week in Crypto, is a discount code that you can enter when you use when you sort of pay for a monthly subscription or a yearly subscription for Sandbase, and you get 25% off. So everything that we're going to be talking about today and a lot more is included into the subscription. If you're on the edge about getting into our metrics and our indicators and reading our insights and everything else that's available with a Sandbase Pro subscription, this should kind of push you over the edge. 25% off, I think, is a no-brainer. We're already one of the most affordable on-chain social data providers on the market, the most comprehensive ones by far. So if you're still on the edge, just enter TWIC when you make your purchase for the first billing cycle. That can be either a monthly or a yearly plan. All right. Let's start with what happened on Monday. So on Monday, we had a market-wide recovery. Some people were busting my balls about calling this a market-wide recovery rather than just a bounce back, but I think it warranted a recovery as a term. In any case, we had Bitcoin go up by about 10%. We had Ethereum jump massively by 23% in just 24 hours. And so I wanted to cover from a fundamental or sort of a behavioral standpoint why we think this happened. Now, there are obviously other reasons why this occurred. From a sort of news-driven perspective, we had Elon Musk on Monday talk about how he was sort of in conversation with North American Bitcoin miners about making Bitcoin more environmentally friendly. We had, I think, Ray Dalio's say that he holds some BTC. In general, there were some promising news on Monday that sort of gave leeway for the price of Bitcoin and then sort of by order of business all other coins to recover. However, from an on-chain data and social data perspective, we've also had signs that Bitcoin might be encroaching a local bottom, and we might be looking for a short-term recovery, and that's what happened. So let's talk about what we saw on Monday as far as Bitcoin's charts are concerned, and why we thought that a price recovery might be in the cards. So let's start with I made the points here that there are three main sort of general areas where we saw a potential for price recovery. Number one was that on Monday and generally over the weekend, a lot of metrics in terms of on-chain data were showing signs of market-wide capitulation and maximum pain. We actually talked about it even on Friday, right? As the last Friday when China was once again announcing their intention to crack down on Bitcoin mining, which kind of drove the price even further down. But we talked about these signs of market-wide capitulation already starting to show up. So that's number one. Number two was finally we have been seeing some early signs of accumulation by large Bitcoin addresses. Unfortunately, that has kind of reversed over the last 72 hours. But on Monday, when I was writing about this, I was actually fairly hopeful about the state of the market, given the fact that after a month-long decline in the total holdings of these two sort of groups of Bitcoin whales that you like to look at, they finally started growing their combined balances into the dip. So that's number two. And then number three is stablecoin data and how the behavior of top cap stablecoins like Tether, USDC, and DAI, how that has sort of suggested a potential desire to buy the dip en masse. So let's move on one by one. What happened on Monday? So first of all, we had, as far as on Bitcoin's and Ethereum's on-chain data is concerned, we had clear signs of market-wide capitulation. So we started with Bitcoin's exchange inflow, which we talked about this on last Friday as well. I think this was what we saw on Friday, and this was what we saw on Monday. Overall, there has been sort of a significant uptick in the amount of Bitcoin, but not just Bitcoin, but the amount I think I have Ethereum here somewhere as well. Yeah, there we go. This is Ethereum. Generally, the amount of top cap coins moving to known exchange wallets over the weekend and into Monday, suggesting that a lot of people were looking to reduce their exposure in the market, sort of move to a risk-off position, and in general probably sit this one out until the market shows signs of further or stronger recovery. So this is sort of the first signal that we had, letting us know that the market was becoming more and more antsy and anxious about its general state, as more and more people were looking to, reduce their exposure and sell parts of their bags. Then the second thing that we noticed was obviously this massive drop in Bitcoin's net profit loss, which we talked about on Friday as well. This was the biggest drop in Bitcoin's net profit loss, I believe, ever, or the second biggest. Let's look at it live, just so I can zoom out and show you exactly how big it was. For those of you that are unfamiliar with what network realized profit loss is, I'm just about to explain it. But first, let me zoom out so you can see exactly how big it was. By the way, in case you haven't noticed, we've done some updates to the metric page. So for example, you can see different sort of metric tabs and a bunch of other quality of life updates. So yeah, if you haven't used Sandbase over the last 24 hours, there's a bunch of cool new features that you'll be able to find. So this is a net profit loss, and I'm going to actually, instead of a 7-day interval, I'm going to use a 1-day interval just so you can see how big exactly it was. And there you go. A massive amount of a massive dip in Bitcoin's net profit loss, which suggests that all of the coins, all units of Bitcoin that have been moving in this period of time were moving at a loss compared to the last time that they moved on the blockchain. So in general, it was one of the biggest potential capitulation events in Bitcoin's history. A lot of and obviously this is exacerbated by the fact that Bitcoin's prices kind of had this massive rally. So obviously there's going to be a massive loss with a lot of short-term holders selling. But in general, this pointed to the fact that many people and many Bitcoin holders were choosing to move their Bitcoin bags at a significant loss compared to the last time that those units of Bitcoin have moved on the blockchain. So the way that network realized profit loss works, I already kind of started explaining it, is what we do is for each unit of Bitcoin that moves on the blockchain, we take the price at which it was last moved. So let's say a unit of Bitcoin was last moved here on January 17th, 2019, where the Bitcoin was 3.6K, right? And then we assume that this was its buy price or acquisition price. The next time that this same unit of Bitcoin moves on the blockchain, let's say it moved here, we assume that it was its sell price. And then we take the difference between those two prices for all of the units of Bitcoin that are moving on the blockchain at any given day. And it becomes this chart. So when you see big spikes in net profit loss, what that means is that on average, units of Bitcoin that are moving on the blockchain are moving at a significant profit relative to the last time they moved on the blockchain. And then vice versa, when you see this type of dip, you've seen a very similar dip, by the way, during the coronavirus crash. And then also very similar, actually, two dips before the end of the bear cycle for Bitcoin in 2019. In general, it suggests that people, holders, Bitcoin holders, are moving their bags at a significant loss relative to the last time those bags have moved on the blockchain. So that was another very potent indicator, I think, letting us know that the market in general was feeling overly bearish, probably overselling a little bit, and in general capitulating away from the market. So that's number two. We looked at exchange inflow, we looked at net profit loss. Both were, flashing signs of bearish capitulation, weekend capitulation in particular. Why I say weekend, by the way, let's move back here, is this drop in net profit loss. It's so big, right? But like I said, what this means is that at this point in time, all of the Bitcoin that are moving on the blockchain over this period of time are moving at a loss relative to the last time they moved, on average. Now, keep in mind that at this point in time, Bitcoin was still around like 40,000. So it needs to, what that means is that a high percentage of Bitcoin that were moving at this point in time were acquired at a more expensive rate than 40,000, meaning that a lot of weekend short-term holders were looking to escape the market and escape further pains because they were fearing longer and further corrections. So again, another sort of indicator that we were in fact looking at weekend sort of collapse and capitulation in the short term. And then Two other signs of on-chain capitulation. Actually, one on-chain capitulation, and then the other one is a sign of just derivatives market and what we can take away from that one. First of all, let's talk about Bitcoin's MVRV. MVRV is a metric that tries to calculate the average profit or the average loss of a group of Bitcoin holders. So I like to look at the 30-day MVRV ratio, and I'll show you why I like to look at it. Weekends giving away their crypto to newcomers. Normal organic cycle, very healthy. That's exactly what I think, Herv. Pretty much my point exactly. There's a lot of newbies in the market over the last couple of months that obviously, thought that this type of market rally was going to last forever. The first moment that they got burned, it was, all hell broke loose. So I think it was, in fact, a lot of it sort of a redistribution away from weekends into long-term bulls, which shouldn't be a bad thing for the market, hypothetically. Now, moving into Bitcoin's 30-day MVRV. So like I said, what MVRV is a metric that tracks the average profit or the average loss of all Bitcoin that have moved in a particular period of time. So currently, we're looking at Bitcoin or the 30-day MVRV ratio, which tracks the average profit or the average loss of all Bitcoin that have moved in the previous 30 days. So it's essentially the average profit or loss of short-term Bitcoin holders. Now, the way that on-chain analysts use this metric, and I'm going to zoom in here, the way that most on-chain analysts use this metric is that the higher the MVRV is, so for example, let's look at MVRV here. It was plus 37, I think it was even further than, plus 40% at its peak on January 7th, 2021. So here, the average profit of all addresses that have acquired Bitcoin in the previous 30 days, so between December 7th and January 7th, was about plus 40%. So the higher the MVRV is, the more unclaimed profits are sitting on the table. And as a result, the more likely it is that holders are going to start claiming those profits, and as a result apply negative price pressure, right? So on the other hand of the MVRV ratio, the lower the MVRV is, the more undervalued the coin is according to on-chain analysts, and as a result, the more likelihood it is that we are going to see short-term price recovery. So historically speaking, Bitcoin's 30-day MVRV ratio has had sort of two support levels. The first support level is at around minus 15%. And this is, by the way, where we are now. You can see these, so for example, this one, pretty much all of these lines are at minus 15%. And I think here we actually bottomed out at minus 15% before we bounced back up. And then the second sort of support level was around minus 25%. It was here. It was at the end of 2018 bear cycle, and then it was here as well. Obviously, this one, I think these two are massive outliers, especially the one that happened during the coronavirus crash. And when they happen, they very often, first of all, signal oversold conditions, and second of all, show sort of unsustainable levels of MVRV, and as a result, there's an increased likelihood that we're going to see a short-term price recovery. So either way, Bitcoin's 30-day MVRV ratio was very low on Monday. So let me show you. Let me show you that once again. There you go. It was when I was writing about it, it was minus 17%, but it was already down here to about minus 25%. So it was approaching that historical bounce back zone. So obviously this is not an exact science, nor does it, is it 100% certain that Bitcoin's 30-day MVRV is never going to fall below its so far historical lows. But it did suggest that we are approaching these historically established support zones for Bitcoin's short-term MVRV. It was another sort of sign that we might be, due for a short-term recovery, and sure enough, it happened at least for 24 hours or so. And then finally, as far as Bitcoin's funding rate is concerned, we had a period of negative funding rates. This was on BitMEX, but on Monday, pretty much all high-volume exchanges had slightly negative funding rates. Huobi, Binance, and OKX, pretty much all of them had around like minus 0.02%. as far as Bitcoin's funding rate is concerned. So what a funding rate is a fee that is paid by one side of the perpetual contract to the other. Essentially, when you see high funding rates like here and here and here, pretty much during all of Bitcoin's tops, when you see high funding rate, it means that the Bitcoin longs are paying Bitcoin shorts, and as a result, the market is bullish on average. And then when you see these massive drop-offs, like you've also seen during local bottoms here in January, it means the Bitcoin shorts are paying Bitcoin longs, and as a result, the market has a predominantly bearish bias, right? So it was another sign that, in general, we were looking at a oversold conditions, a period of panic selling and growing market anxiety, blood on the streets, in a word, right? Approaching maximum pain. I have a few other ones like Santiment that I'm not gonna go over. The one thing that I also showed here is the same thing for Ethereum. So spike in exchange inflow, massive drop-offs in network profit loss, historical lows at MVRV, the 30-day MVRV ratio, and very bearish sentiment. So that was number one. Number two, the reason why I thought there was a sort of possibility that we saw, that we've seen that recovery on Monday, was whale accumulation. So this has changed since then, so keep it with a grain of salt. We're going to look at what's happened over the last 72 hours. But on Monday, this shows the total amount of Bitcoin that is being held by addresses holding between 100 to 1,000 and 1,000 to 10,000 BTC. So Bitcoin millionaires. I usually don't like to look at addresses holding between 10,000 and 100,000 Bitcoin. First of all, because there's only about 60 of them, and second of all, because most of them are dominated by exchange wallets. So that's going to skew the data quite a bit. So these two, to me, are sort of a sweet spot if I'm looking at the behavior of Bitcoin whales in particular. And you can see overall that there have been very interesting sort of trend lines as far as their combined holdings and the price of Bitcoin. We've seen several sort of drop-offs in their combined holdings around local tops here in March at the all-time high, and then once again in April during the real all-time high. Since April, by the way, the combined holdings of these two groups of holders, large Bitcoin addresses, has continued to drop off. I think it dropped off by about 120,000 Bitcoin in about a month's time. So for the first time, really since, if you discount this a little bit of an outlier, for the first time, we've seen a sort of a relatively strong uptick in the combined holdings of these addresses, suggesting that some Bitcoin whales may finally be looking to get back into the market and improve their positions, buy the dip. So that was another sign that okay, short-term wise, we might be looking at a potential for recovery. And then finally, and I've talked about this, I harp on this pretty much every chance that I can, the behavior of large stablecoins, and especially the amount of stablecoins moving to exchanges, as opposed to or as compared to the price of Bitcoin. So first of all, guys, let me know if you can see this, if you want me to zoom in somehow. Maybe it's better that I do it like this. Yeah, this is probably better. All right, so what you're seeing here is the amount of USDT, ERC20 Tether, USDC, DAI, and BUSD, Binance USD, moving to exchange wallets over the last 6 months, plotted against the price of Bitcoin at any point in time. So two things that we see in all of these charts are two massive spikes in the amount of these stablecoins moving to exchanges at, first of all, during the bottom, after Elon Musk tweeted that Tesla is going to be canceling any Bitcoin payments. And then second of all, during the actual bottom after the China news. So this was Tether, this was USDC, DAI, pretty much every time for all of the big four stable coins, both times we have seen sort of mirrored behavior, massive amounts of stable coins moving to exchanges. So some on-chain analysts believe that when this happens, it usually suggests a increased desire of stablecoin holders to move back into the market to exchange their stablecoin bags for more volatile cryptocurrencies. As a result, basically they use it as a proxy for buying the dip, right? Now, it's not as simple as that. There's many reasons why you would suddenly move massive amounts of stablecoins to exchanges when there's a market-wide crash. Number one, newly found arbitrage opportunities. Number two, more and more exchanges are offering staking for stablecoins. So if you want to exit the market, actually, it might be a good idea. Like, for example, USDC, you can stake USDC for yield, right, for interest. And then number three, they can be providing lending to leveraged traders. So it's not super obvious that all of this newly found inflow of stablecoins to exchanges has gone directly to buy into Bitcoin and Ethereum. However, the timing is very curious, number one. And number two, it's not the first time that we've seen spikes in exchange inflow coincide with periods of short-term price recovery for Bitcoin. For example, let's look at Tether in particular. We have seen big spikes in Tether's exchange inflow around the local bottom here. And then once again, as Bitcoin bottomed out here, I think it was around, what was it, like 50K? And then also in February, after the market-wide crash, we've also had another sort of period of, or sort of a strong uptick in the amount of Tether moving to exchanges. We've seen similar spikes in USDC here and here, DAI as well here. So in general, it wouldn't be the first time that these sort of spikes in stablecoins exchange inflow have marked local bottoms. And potentially suggested that there's a new blood looking to buy back into the market at a discount. So these are some of the sort of fundamental reasons why we thought on Monday, Bitcoin and the entire market have managed to recover. Now, a lot of these metrics have changed over the last 72 hours. So we're going to be looking into what's going on right now, not just with them, but other metrics. But before that, Max, if you're ready, you might want to share your screen for a while.
Yeah, I'm ready. It's interesting. I was just typing in the channel. I can take it over.
Okay, cool.
Good. Welcome. Let me share the screen. Bildschirm teilen. I think this one. Max, confirm if you can see it.
I can see you. Yeah, I can see myself as well.
Discord. Okay. What I wanted to share today, the following thing is when 2 weeks ago I was here in the stream, 2 or 3 weeks. I think it was 2 weeks ago, yeah, just before we dived, and I was urgent for the revisiting 40 and possibly 30,000 Bitcoin. I was sharing Elliott wave structure in pattern.
Wait, Max, I'm still seeing both me and Max Bartel on your screen, and it's kind of blocking the chart. You might want
to Skype window is in front.
Yeah, minimize that.
This is how it works. Okay.
Yeah.
Sorry, yeah. I see you both. Yeah. So 2 weeks ago when I was sharing, I was showing on an example of Elliott waves, 3, 4 waves and long term and all those kind of things. And I mentioned shortly, we use, so I use personally a lot of on-chain metrics. It just, you cannot show in a short period of time everything. So 2 weeks ago was Elliott waves. And luckily for us, it did move. But there is a very specific pattern, which I think in this case can teach us all very nice setup for mid to long-term bottom or tops. And it's not the first time. The last time we had exactly the same, or even on a more broader scale, before COVID. If you read, we had an insight at that time predicting market drop before even COVID started. And this is actually interesting and hard to believe things, but bad news, they're coming, but they're coming in the middle or the end of the move. The move itself starts and matures before. This is normal market conditions when the market just exhausts its power. Nothing can go in a straight line forever. Our emotions cannot last forever. We need to always take break, be we excited or depressed. That's why market moves in the cycles. And the same things happens in the crypto market over and over again. We do exhaust ourselves of bullish power or bearish sentiment. And here's the charts. I think they illustrates the best as well. I was compiling it. And I'm using them quite extensively. The general approach is you look for divergences. When the strong market has specific characteristics. And remember, we're like observing market from behavior standpoint point of view, and behavior in this sense, behavior of its participants. And I will explain this all these massive lines, what it means and why it's important. And the strong market goes for cryptocurrencies specifically, and expanding networks. More participants, more new participants join, and active one also actively interacting, especially in the form of ERC20 or Ethereum. They have so many nice use cases in liquidity pools and leveraged longs, shorts, and whatever we want. The moment this activities slows down, it has a very specific meaning when we're up, when we're going up. When activity is slowing down, it has a meaning that participants becomes kind of convinced that market will go up, and they're just waiting for it to go up and waiting, and more people waiting and convinced, okay, we go to, I think Ethereum was 5,000 was the next goal. Yeah, the less likely it will happen. When they're interacting actively, people buying, selling, especially when as long as people selling, it's all good. There is some level of concerns or disbelief, it's all good. The moment we stop seeing it, it's not good anymore. And it shows this pattern like over and over again. And just to explain you how you can see it on two metrics, there are more where you can use, but I will show just two metrics: directive addresses. And in this case, I took 24 hours. I like them because you can spot these patterns also intraday now, because we tracked clearly every tick, every, I think maybe even block, every block or every 5 minutes, we store and show the data. And there will be another chart with new or network growth, how many new participants join, and how many new addresses are starting to interact with the network. Now, price, beautifully designed by our front-end team, candlesticks, looks amazing. Also interesting choice of colors they have. But you see this is the price. And then there will be daily activity or directive addresses on intraday level for Uniswap, for SushiSwap, and for MakerDAO. Now, maybe already those who have very sharp eyes have noticed it, but I will show what I want to see. When the network is growing and growing exponentially or explosive in the crypto market, you will see explosive growth activity. You see it in the market, yeah, and it's happened, or you see in this chart. It was around January, February, yeah, when we started to actively accept it all. Majority accepted. Wow, we're growing very nicely. The DeFi summer was not the end. So, and this is where we picked in terms of network activities. But then, interestingly enough, the market started making new highs, and Ethereum doubled its price, yeah. But the network activities, they did not grow so fast anymore. And in most of the cases, they actually could not even reach to the tops. It was a Uniswap, was the same for SushiSwap, but for SushiSwap, actually, it picked a bit later. Uniswap, it was around January, SushiSwap, February. Those who know details, the network, of course, behaves differently, so they pick up in a different point of time. And the MakerDAO pick up even earlier, somewhere end of December. So there is a peak of network activity, and then price keep pushing, but network cannot catch up with this anymore. And this is a worrying sign. Now, it was on one level, on a kind of midterm. If you look into details this time, you will be surprised what you will see. Oh, get it selected? I think I need to select it here. Let's select it here. Samsung's not working.
I think you might.
No, it's working. Okay, just reloading. Oh, become slow. Wow.
Yeah, I think it's because you're drawing like 4 different projects on JDA, so it takes a while to load.
So now look carefully. This is the price. Yes, this is the price. We look just for 1 month. Let's say April and middle of May. So this is the scope. Now look at Uniswap. Yeah. Somewhere beginning of May it peaked, then it started dropping off dramatically. As the price still was pushing. You see in the background, here the price is still pushing up. Activity network goes down very strong. The same more or less for sushi, picking up here and then go down. The activity picked up once the market started crashing. This is another side of the story. But as the price was going down, network activity went going down. Maker the same. Yeah. So it was a kind of double divergence on the long term. On the long term case, looking from February, January last year, we were diverging. And on short term, the same. Yeah. And it's on-chain metrics, which I start to believe could be with quite strong confidence, a very good approach to analyze. And we have in templates and even as an indicator, daily active addresses divergency. But I always suggest you look into charts yourself. You teach yourself to spot it with your eye. It's very educating, because what you want to see always how network behave once the price grows strongly in one direction or another, and how the network participants behave in this time. So with your machines are good, but we are humans, and in spotting specific conditions are better still, in my opinion. Good. And for the network growth, it's basically the same. But let's watch there. Okay, I need to go back. I think it was maybe 15.
So for people that are unaware, network growth refers to the amount of new addresses that are interacting with these tokens on a daily basis. So basically, we're looking at the total number of addresses that have never before sent or received Uniswap, SushiSwap, and Maker on a daily basis, how that number has progressed over, what's that, the last 6 months.
Mm-hmm. So here's the same. And I'm selecting one by one because I put many metrics on one screen, just to make it easier to navigate through it, and it looks a bit noisy. So, but when you highlight one metric after another, it shows on the screen clearly. So again, price, and we see we took the time from September last year, this time to May, and network growth of Uniswap. Where was the strongest network growth? Yes, again, January, February, we expanded. A lot of new blood came into the market. A lot of new buyers came. As we came into April, May, less, much less. Like 30-40% less. Not enough new blood to keep the train of crypto donation or crypto speculation running. SushiSwap the same. Okay, nice. This color not the best. Let me take a bit darker. So yeah, so SushiSwap the same. A bit later, February, beginning of March was very strong growth. A lot of new people, a lot of new liquidity pools and stakers came. April less. May, just before we talk, even less. You see on each other, it's like keep dropping. It cannot go forever. And this time you want to leave the market. And or you have to be aware of what's coming, and make a DAO even stronger. We kind of a little bit recovered in April and around this time on Maker, but still, if you look into the charts, if you have the data, you have access to data, and you plot on it, you see like it's not even half. Yeah. There are a lot of tokens, and Maker actually was very nice fundamentals, and there are still there. That's why I also believe we are not done yet. Fundamentals are very strong, but market never goes on one line. So these two things, daily active addresses and network growth, has to be applied. It's alpha indicator in my opinion, and it reveals the network underlying network behavior quite nicely. So this is what I want to show. Maybe for next week, if Brian's still partying, well, I think he will not. But I have one more thing. When I was in Dubai, as this 4 weeks showing to some group of people some metrics and analyzing, I found out that we did not talk a long time for social volume. Because during my presentation, I showed it, and again, it showed very nice patterns for just pure social volume for Bitcoin when we're crashing. Very nice. So maybe next week we can talk about it, because it will take me again 15 minutes to explain a bit about what is network assumption or what is behavior assumption when you look into this metric and how you can treat it. But
sounds good. I mean, I'm gonna show social volume for Bitcoin so we can maybe shortly go over it. But yeah, if you want to like do a longer analysis, we can give you like a 10 to 15 minute window next week.
All right. Just to finish my part, when we started to build a platform, and I started to build in 2016 because I was using all these methods for my own investment. I had some assumptions, and I have been adjusting also, like learning how Dean and Brian, how they're using it. but it still stays the same, understanding the behavior of majority of participants and specific groups. Majority because they're acting late in a specific way, and big groups of holders because they can move the market. It's, in my opinion, the only sustainable way to generate alpha and be ahead of the market, because it proves over and over again, and it makes sense once you realize who moves the market and how they do it, and all the cycle behavior. It makes sense it only makes sense from logical point of view, if you can apply logic to market at all. And all others, then whatever surrounds us, news, publications, I don't know, updates and scams, they fit into the narrative of behavior analysis nicely. But you need to understand how to understand the news. Sometimes good news leads to pump, sometimes to dump. So how can you use it? If you understand the underlying behavior patterns, you can use it nicely. Not always, but much better. And you know when sell the news and when buy the news. Just a remark why we keep doing actually on weekly call more or less the same. And it is more or less the same. It's just market condition changes. Okay, I think Dino, your turn.
Thank you, Max.
Unless there are questions, I can answer them later.
If there are questions, just let us know in chat and we'll get. Oh, right. So I'm gonna do like a quick run through where Bitcoin is right now. Max, if you've already linked to the poll, good. If not, guys, let us know in chat what coins you would like us to see. I saw a few people mention, I think, energy. If there are other coins that you would like us to do some quick analysis the next 15 to 20 minutes, let us know in chat. One caveat, especially, or it would be especially good if these coins live on Ethereum. The reason for that is because we provide a very comprehensive on-chain coverage for all ERC20 coins or Ethereum-based coins. So if you would like us to look into things like Cardano and Polkadot, for which we don't yet have on-chain coverage, we can still do it from a few other angles, like social activity, which we already only have, nobody else really does, development activity as well. But if you would like us to look deep into network activity and metrics like exchange inflow, MVRV, and things that I was just talking about for Bitcoin, Ethereum and Ethereum-based coins are probably your best bet. All right. So as we get people letting us know in chat what they want us to see, I'm just gonna kind of tie my analysis back from Monday to what's been going on with Bitcoin recently. So the first thing is I'm going to look into Bitcoin's exchange inflow. We have definitely seen this period of, like I showed in my Monday report, we have seen this quite significant spike in the amount of Bitcoin moving to exchanges. There's also been another, although albeit lesser, definitely a pronounced spike in Bitcoin's exchange inflow over the last 24 hours. So it seems like people are also once again starting to move some of their bags. It seems like on average, the sell side pressure is getting more and more exhausted, but there's still people sort of flooding out of the market. Once again, I think this is a healthy sign. What you definitely don't want to see is people sort of holding on to their, I think at least, not definitely, none of this is financial or investment advice by any stretch. But in general, I think, in my opinion, it's more healthy to see people exhibit signs of concern and fear and uncertainty during these market-wide crashes than if they were diamond handing throughout the whole ordeal, because it would suggest sort of market-wide sort of overvalued conditions, right? So one other thing that we want to see is what is Bitcoin's network realized profit or loss looking like today? So this was the all-time low, I believe, in Bitcoin's network realized profit loss, suggesting that at this point in time, all coins that were moving on the network were on average moving at a significant loss relative to the last time they moved on the network. We have had several more sort of dips in Bitcoin's network profit loss over the last 72 hours, but also yesterday and today as well. So it seems like the period of holders moving their bags at a relative loss continues into this latest dip, which once again, first of all, to be expected, but second of all, probably a healthy reaction to market, market corrections and market crashes. So in general, there definitely seems to be a pronounced sort of increase of FUD throughout some segments of Bitcoin holders, which is likely a good sign or a healthy sign for a sort of mid to long-term recovery, is the fact that we're seeing weak hands capitulating away from the market and hopefully reallocating their funds to long-term bulls. So one other thing that I want to show is Bitcoin's 30-day MVRV. So I was talking about how Bitcoin's 30-day MVRV was at this, one sec, let me use the this one instead of the intraday one. We are making some changes to the intraday MVRV. So for today, I suggest using the regular one. It's basically the same thing. Intraday one is just intraday MVRV is just a bit more granular, but it shows the same patterns. Let's take 1 day. Yeah, I think 1 day is fine. Last 4 years, maybe. Yeah. Okay. So we're currently at about minus 15%. So here's, okay, I'm not moving my mouse. You can kind of see where we are at the moment, and you can see the support line that minus 15% in terms of 30-day MVRV ratio has sort of shown in the past couple of years. In general, what MVRV ratio, the 30-day MVRV ratio being at minus 15% means is that on average, all addresses that have acquired Bitcoin in the previous 30 days are currently minus 15% on their initial investment. So like I said, according to some on-chain analysts, the lower this metric goes, the more undervalued the coin is. And as a result, the more likely it is that we are going to see short-term price recovery. Obviously, this past performance is not indicative of future results. It is, however, notable where we are at the moment as far as short-term Bitcoin holders and their overall behavior in the past. Now, let's look at the long-term MVRV. So currently, we are going to be looking at, once again, I'm checking out intraday instead of the regular MVRV.
Just a quick note, the poll is ready in chat. Please vote.
Okay, cool. Poll is ready in chat. So Max has set up a poll for all of the coins that you have already asked us in chat. So go and vote for the coins that you want us to analyze, because we're only going to be able to do like 2 coins, probably 2 to 3. So Bitcoin's 365-day MVRV ratio is more interesting. So this is the average profit or loss of longer-term Bitcoin holders. Currently, we're at about break even, which is good. I mean, it's not near its historical bottoms, so there's definitely more room to grow, more room to go down. Like during the coronavirus crash, we dumped all the way to minus 10%. At the heyday of Bitcoin's bear cycle in 2018, we were down to minus 54%. But overall, if we're looking at it in the context of Bitcoin's current rally, it's fairly or relatively low. It's not still undervalued or it's not approaching historical bottoms, but it would at least, according to this metric, provide room for price appreciation. It's not necessary that it is going to happen, but there's, it's certainly not close to these historical highs that we have seen both in 2019 and 2021, pretty much peaking at around the same levels, right? So that's another thing that I wanted to show. Now, probably my most interesting metric that I wanted to show, or one of the most interesting metrics, I don't really have favorites, is what's been going on with Bitcoin bulls. So the article that I wrote on Monday, I wrote it when the combined holdings of these 2 groups of holders, 100 to 1,000 and 1,000 to 10,000, were still growing. And they were growing steadily and quite nice, I think quite nicely. This was around 20,000 Bitcoin being added to these addresses in a span of like 2 days. So we're currently looking at the percentage of supply of Bitcoin that these addresses hold, but we can move to the absolute numbers or the absolute amount of Bitcoin that these addresses hold. Yeah, so let's zoom in. So we've gone from 9.02 million Bitcoin on May 22nd to 9.06 million on May 25th. So that's 40,000 Bitcoin. That was a sort of a nice little, very short-term recovery in terms of the total amount of Bitcoin held by very large BTC addresses, right? However, or unfortunately, over the last couple of days, first of all, we have seen a slight dip and then a period of sort of just a stagnation as far as the combined holdings of these addresses. And in general, I guess you could say that this trend line or decline has not really been canceled. it remains in play. So overall, this is the metric that I like to look at and observe on a daily basis. These types of or periods of strong, if we look at the last 6 months, these periods of strong accumulation of Bitcoin's large addresses have coincided with periods of price recovery and price upticks. Obviously, once again, previous performance not indicative of future results. However, this is what we've seen throughout this latest rally. Over the last month and a half, almost 2 months now, the trend has been down, and as a result, or just coincidentally, the price of Bitcoin has also been in a fairly tumultuous condition. So the fact that Bitcoin's large addresses are now once again showing sort of signs of inertia is not my favorite thing ever, but it is what it is. So there are some signs that we are still in sort of very fuddy, if that's a word, conditions, like a lot of uncertainty and panic selling by looking at some of Bitcoin's on-chain metrics. However, what is concerning is that Bitcoin's whales are still sort of not protruding or not accumulating at a rapid clip. One other thing that I find fairly concerning, not super concerning, but I would keep an eye on it, is the behavior of Bitcoin's active addresses. So this is, Max has just talked about it a minute ago. Essentially what we're looking at here is the amount of unique addresses that are sending or receiving Bitcoin on a daily basis. So I'm going to zoom out to the last year of data. And here's where we are now. So I'm just going to put this sort of line here so you can see where we are now compared to the rest of this rally. I'm actually going to put it right here at the 1 million mark. So this is an imaginary milestone or imaginary threshold that I've placed for Bitcoin, but so far it seems to have done pretty well. Over the past 6 months, there have been very few days where the amount of unique addresses interacting with BTC on a daily basis have crossed below 1 million mark. Actually, until this period, there's only been like 6 days since the start of the year. And then here, obviously, there has been, with the drop, there's been a sort of fairly strong decline in Bitcoin's daily active addresses. Overall, or as a rule of thumb, what you do want to see is you want to see a sustained uptick in the amount of interest and demand in a coin, and a proxy for demand in a particular coin can be or active addresses can be used as a proxy for a demand or engagement with a particular coin. The fact that Bitcoin's daily active addresses over the entire last week have remained heftily below 1 million per clip is slightly concerning, because it suggests that there's a sort of less demand that is going to be needed to support sort of stronger market-wide recovery. If we look at 2017 and what the daily active addresses for Bitcoin looked like at the time, 1 day interval. So, I mean, similar thing, right? We've had this period of decline in price, as well as a decline in its daily active addresses or on-chain activity. And it wasn't until we started to sort of, first of all, bottom out as far as Bitcoin's addresses are concerned, that we were able, and we started to once again see a more sustained recovery, or at least a plateau in terms of its on-chain activity, is that we saw some level of Bitcoin's, somewhat sustainable price recovery. So this is something that we not just see for Bitcoin, but for a lot of other coins as well. It's obviously not the end of all days if Bitcoin's active addresses could remain relatively low for a somewhat pronounced amount of time. However, moving forward, what I would like to see is the Bitcoin's active addresses once again blow up to like 1 million to 1.2 million, basically to go back to the levels that they were at around, and even before the all-time high, like 1.14, 1.12, suggesting that there's the same level of demand and interaction with BTC, because currently what we're seeing is a sort of clear sign of reduced interaction with Bitcoin. Not a great sign if you're sort of looking at the market in the short term. So one final thing that I wanted to show is we haven't really touched on it quite a lot today, or at all, but I wanted to show what Bitcoin social sentiment looks like. So this is a metric that nobody else really has because it's something that we've developed in-house. We've been, for those of you that follow us know that we've been tracking the social conversations on over 1,000 different crypto-related social channels over the last 3 years. So this includes Telegram groups, crypto subreddits, Discord channels, Twitter accounts, other places where people talk about cryptocurrencies, and cryptocurrencies are the main topic of discussion. So one of the metrics that we've developed using this data, we collect about 100,000 new messages every day. One of the metrics that we've developed using this data is social sentiment for all of the coins on our platform. So all of these mentions of, in this case, Bitcoin, that we collect on a daily basis, we filter them through an algorithm that we've created that labels these messages as positive, negative, or neutral or ambivalent towards a coin. And the result is this chart. When you see these spikes in Bitcoin social sentiment, it means that on average, the crowd is relatively bullish towards BTC, and these drop-offs in bullish sentiment suggest, in general sentiment suggest that the crowd is becoming increasingly bearish towards Bitcoin. So in fact, and I wrote about this in our last week's report, if you want to go back to Insights and go scroll a few pages, you'll be able to find it. I wrote about the fact that Bitcoin's general sort of social sentiment was actually quite high throughout this correction. It remained relatively high, relatively positive. In general, it seems like the crowd was very much expecting a short-term correction and then an immediate bounce back. There was a lot of calls to buy the dip. It seems like the mainstream community, at least according to the channels that we track, hasn't really been super bearish on Bitcoin as it started to correct through Elon's and China's news. Over the last couple of days, however, we have seen a massive decline in Bitcoin's social sentiment to the point that it's the lowest since the October of 2020. Now, what does that mean for the price of Bitcoin? Once again, past performance is not indicative of future results. However, we have done several backtests on the idea of how the extremely bullish sentiment impacts the price of coins and how the extremely bearish sentiment impacts the price of coins. And in general, the rule of thumb has been so far that the extremely bullish sentiment has rarely been a friend to cryptocurrencies, including Bitcoin. We can see this was the top of 2019. This was the top of 2021, another sort of big spike in bullish sentiment. Whereas in general, these periods of bearish sentiment have earmarked stretches of price recovery or sustained price recovery for Bitcoin. It's essentially the same thing that we were looking at as far as on-chain metrics are concerned. You're looking for blood on the streets indicators. You're looking for maximum pain indicators. You're looking for places in time where people are becoming more and more concerned. The euphoria is gone, and there's a sort of a pronounced fear among market participants and just mainstream audience about the further fate and destiny of this rally. So currently, as far as Bitcoin is concerned, we are finally seeing over the last 24 to 48 hours this very strong decline in their average sentiment towards Bitcoin, which historically speaking isn't a bad thing. Should actually bode well for Bitcoin's short-term recovery. So it's a mixed bag of, I know it's not nobody's favorite answer, but it is really a mixed bag of Bitcoin's metrics at the moment. We are seeing continued signs of short-term capitulation, spikes in exchange inflow, dips in network profit loss, negative funding rates. In general, we are seeing signs that Bitcoin holders are still starting to continuing to reduce their exposure, which is healthy, I think, in these types of events. However, Bitcoin's active addresses are kind of lethargic over the last week, which is not great. Bitcoin's whales have stopped accumulating. Sucks for everyone. And then as well, we aren't really seeing, we could be seeing MVRV, the long-term MVRV, also decline a bit further. So if I were you, what I would be looking at further on in the next couple of days were, if I would to look at two metrics, I would look at Bitcoin's daily active addresses, and I would look at the behavior of large Bitcoin whales. Obviously, otherwise, you can check out my favorites as far as the metrics that I track daily as a sort of a cheat sheet, but these are the two that I would focus on. All right, that does it for Bitcoin. Max, what are the coins that people want us to look into now?
Okay, I can put them up on screen now. First place is MATIC and Link.
Oh,
Since
nice.
I closed the poll, a couple of more votes have come in for MATIC, so let's go with MATIC first, maybe.
I love it. I love it. We get a lot of calls for MATIC. A lot of votes for MATIC on each stream. I guess a lot of people are invested.
But this time, MATIC, I think, win in the last moment. I was checking from time to time. First, it was changing this binary. But then someone said that actually it's interesting because we're making analysis regularly on MATIC. And I think you even placed maybe prediction on Sana. I don't remember exactly, but maybe. So someone say, yeah, it would be interesting to see how things evolve over time because we're covering it regularly.
Yeah, I think MATIC has had one of the more swift recoveries, if I'm not mistaken, from the drop. Let's look at a few of its on-chain metrics and social metrics and figure out where we are.
The point is also would be, as we are working on it, don't have it yet, from MATIC own ecosystem, how things are developing there.
Yeah.
Because I remember when we looked into it, not on the stream, but check it, it was, I think, network activity. What was going on there was, wow, not bad at all.
You mean on the protocol level?
Yeah.
Yeah. Yeah.
But anyway.
Yeah, we're going to be looking at the token level today here. Polygon MATIC, let's use MATIC, just more people are familiar with it. All right, I'm going to just start with on-chain activity in general. Great, yeah. MATIC's daily active addresses have, first of all, you're going to see these types of spikes. Let me make it a bit clearer. Yeah. So this is the amount of addresses that are interacting with MATIC on a daily basis. It's no surprise that you see these upticks in active addresses as the price rises, because first of all, more people are aware of the rally, so they're trying to take advantage of it. And second of all, some of these spikes in active addresses are actually going to be deposit addresses. Or they're going to be caused by an increased activity of deposit addresses or addresses that are being used to deposit MATIC to exchanges. So for example, if I look at deposits for MATIC, yeah, you can kind of see the overlap between spikes in active addresses and spiky daily deposits. So it's not always that these sort of short-term spikes in active addresses are a good sign. What you want to do is you want to compare it with what are the daily active deposits for MATIC. So let's talk about deposits. Deposits are addresses that belong to exchanges that are only used for one purpose, and that is to funnel this coin to exchanges. So when I send money to, or when I send MATIC to, I don't know, Binance, it doesn't directly go to a Binance cold or hot storage. It first needs to pass or hit a deposit address. So the reason why we track these deposit addresses is because they're singular purpose. It is to funnel funds to exchanges, and therefore we can kind of use it as a proxy for the amount of sell-side pressure or the amount of users or holders that are funneling or sending MATIC to exchanges, presumably to sell. And that is why it is very often the case that you are going to see upticks in daily deposits during rallies and during local tops. So we have seen sort of, first of all, here before a correction, here at the all-time high. Immediately as MATIC started to recover, we had another bounce in the daily active deposits, and then another strong surge in daily deposits here before MATIC corrected once again. Now, daily deposits currently are a daily metric for us. We can't, it's a daily metric. For a moment there, I thought we've already introduced lower intervals, but we are working on introducing lower latency for daily deposits because it's a very interesting metric, and you want to track it more often than just once a day, right? Based on using historical trends. So currently, or over the last 24 to 48 hours, there's not a whole lot of new daily deposits for MATIC, so it doesn't seem like there's since Wednesday to now, there doesn't seem to be a new wave of sell-side pressure for MATIC, which I think is not bad. You do every now and again you want to sort of a period of normalization as far as sell-side pressure is concerned in order to allow for price to recover. So if we look at MATIC's exchange inflow, Yeah, same thing. We have seen these, or there has been a period of spikes. First of all, around its all-time high, there has been another sort of spike in MATIC's exchange flow at the bottom, suggesting capitulation. But since then, there has mostly been sort of an exhausted sell-side pressure. Less and less MATIC are being moved to exchanges. So, I mean, in general, I think in the short term, this wouldn't be the worst thing for MATIC. It seems like people are hodling the coin for the time being. Over the last week, we haven't really seen a whole lot of new exchange-based activity. So yeah, I'm not surprised. I think outside of all of the ERC20 coins, MATIC is probably the coin that people are the most bullish on. So yeah, I think this is, generally speaking, this is probably pretty good. The fact that we're seeing sort of a reduction in sell side pressure. Now let's see whether the fundamentals agree. So start with the active addresses for MATIC. How many? Well, let's not call them people. Let's call them addresses, entities, whatever. How many addresses are interacting with MATIC or sending or receiving this coin on a daily basis? If we even sort of take away these outliers, the current level of activity is about 10,000 addresses. That is massive. I always use this when I try to let you guys know, put in context somebody's on-chain activity. What I'm going to do is I'm going to show you how many coins on Ethereum have 10,000 or more addresses over the last 7 days. And you're going to see just how low of a list or short of a list that is. By the way, Max, I think your mic is unmuted and I can hear you typing every now and again.
Oh, sorry. Actually, yeah, I was
No
answering
worries.
here too. And if my mic anyway is unmuted, I prepared a small set also for MATIC. It's follow up on what I showed before.
Sure.
It will be nice sharing. Actually, I found out something interesting.
Sure. Let me just see. Let me just show this first. So daily active addresses. I'm looking at our screener. What I've done so far, for those of you that are following, I've just first of all, I've only wanted to look into coins that live on Ethereum. So I go to market segments. This is without any filters. We have almost 2,000 coins on our database. You go to market segments and say, okay, I've already chosen. I only want to look at coins that live on the Ethereum. That shortens the list to around 1,200 assets. And now I want to look at only those coins that have, let's say, more than 8,000 addresses in the past 7 days, on average. This is the list. That's it. That's the whole list. Ethereum, Tether, USDC, Chainlink, MATIC, DAI, and Shiba, which is a very popular coin at the moment, but I personally don't think that's sustainable. That's the list. That's the whole list. So MATIC is currently in that sort of very upper echelon of activity on the Ethereum network. Whether that's sustainable, who knows? I think obviously the L2 hype is pushing or propelling interest in MATIC. For the time being, MATIC's on-chain activity is very much strong. It's even stronger than DAI. It's sort of mind-boggling, right? So yeah, Chainlink and MATIC are in the top 5 as far as the total amount of addresses that are using them over the last 7 days. So that's something to keep in mind when analyzing its on-chain activity. Let's look at network growth, or the amount of new addresses that are interacting with MATIC.
Yeah, I will cover it both.
Okay, I'm just going to show it and you can talk about it.
Okay. Well, let me then share, because I put 3 metrics.
Okay. You want to share your screen? Okay.
Yeah. Now I will. Okay, because I was checking details. There was a question in the channel if any indicator can be used as a trading or signal. I actually don't like us to use Santiment platform this way. I really prefer to build a context to underline dynamics. Yeah, but I can answer the question. Yes, some of them still can be used. I mean, and what still, it means the more professional players come to the market, alpha disappears. If you take only one metric or signals, it will disappear. People will start exploiting it sooner or later. And don't rely on any single metric. It's the life cycle of single metric is not long. But if you put things in context and you deploy on top of it your brain and understanding how market works, this skill is very valuable. It will stay for you forever. And you will change your metrics because we add them constantly, or you will add few more angles how you look in the market to extract understanding of it. It's more sustainable. Now, for the moment, 24 hours directive analysis is a good idea. And very active coins. Now you see when there was market dropping, activity is going down, and at some point of time before the market bottomed, it started to go up. This is the same divergence we've been talking somewhere in the beginning of the stream, but it shows itself quite often also that when market is about to turn from going down to up. And I'm talking about this time. 23rd, looks like 23rd, 24th, 25th of May. The electric values for MATIC changed. It did not go down anymore. It started to increase, even though price was going down. So this you can use if you just want to use one metric. For coins with so high activity, it works. But you need coins with high activity. It's the same if you ever use, by the way, if you ever use Elliott waves for similar behavior analytics, you need to use assets with a lot of activity, because then the crowd shows itself. The one metric can be used. But what I want to show here actually is a different thing, because we are talking about a bit longer. Let's say from January perspective. And here again, so price MATIC as always, this one, nice candlesticks. Maybe let's limit. To this. Now, it's different from examples we took before, Uniswap, SushiSwap, or Maker. As you see with each and single top, network growth, directive addresses, or intra-directive addresses, it kept pushing up. It did not diverge. Especially network growth, there was a lot of new blood. So there is a good chance I would put it above 50%. We can make a new high in MATIC. The network doesn't seem to be exhausted. We did not see a typical divergence, and we could try to see apply trading volumes, okay, or just volume, and I'll put in another chat. This volume and social volume, because typically I use, holistic game. I like to use all possible metrics, and social volume will take, maybe 12 hours. And this is the way how I would approach any token. I would look at more or less in the same sequence. So, and we say, so it's still growing. The amount of people who learn about MATIC keeps growing. There is still unused blood in the market. There are many new people who could join. And trading volume the same. And the only obstacle could be if the whole market decide to go down for a moment. It will be very difficult for MATIC to sustain, even for them. But it looks good. I don't see any terrible pictures of divergences. Not on a single metric. All on-chain we looked into looks normal, and social volume and trading volume all looks good. So I would place my bet if market doesn't decide to revisit the lows. MATIC will be the first one to break all-time high. So that's it from my side.
Just a clear sort of notification that nothing that Max says should be construed as financial advice. It's your own opinion, Max. Of course.
I'm sharing how we read the data. Don't take this financial advice.
Okay. We're already.
Don't bet your house on
it. Please don't. We're already 15 minutes in. Let's take a very quick look at Chainlink. So, Gary, if you're still here, if you wanna share this article, we published it literally 6 hours ago. on where we are now with Chainlink. There's a few metrics in there that kind of just give a very brief overview of what we are seeing as far as Chainlink is concerned. I've already shown you guys that Chainlink is one of the most used coins, or remains one of the most used coins on Ethereum. We have seen the sort of, as far as, let's zoom out a bit. As far as daily deposits and exchange inflow, we are, I think, seeing very similar charts to what we've seen with MATIC. So these big, look at this, very clear sort of spikes in both deposits and exchange inflow around bottoms, suggesting, yeah, this is where people have capitulated. Since then, there's been a clear decline in both the daily deposits and exchange inflow, suggesting that, you know, people that wanted to get out, people that are not strong enough to be in the Link army, they've probably left the party around these levels. And now I think they have likely moved their bags into a long-term Chainlink bulls, which should be good. Let's look at a bit. So by the way, I know somebody in the chat said that the amount of metrics that we use in these sessions is mind-boggling. I understand. And then on the other hand, we get feedback at some of these sessions that people would like us to look at more metrics. So if you notice, I've only been using like 5 or 6 metrics throughout this call, simply because I know that sometimes it can be very difficult to figure out more than that. But you know, some people like when we look at like 10 to 15 different metrics. But yeah, to do it in an hour and a half, it's really it's not a great format. So as far as where the cheat sheet is, these are the metrics that you. So look at my favorites here. You can screenshot this or just look at it in chat in the video. These are the metrics that I usually use on a daily basis. There are others like the whales that are not here. So you can just type in by balance of addresses and you'll see supply distribution. This is the metric. But outside of that, these are probably the metrics that I use the most. Okay, looking at the MVRV for Chainlink. Let's zoom out of this massive spike just so we can see it a bit clearly. Okay, so similar to Bitcoin, like there are these established support or bounce back levels as far as 30-day MVRV ratio is concerned for Bitcoin, for Ethereum, for Chainlink. We see it time and time again. It seems like Chainlink has also been able to bounce back almost exactly at this point, minus 40%. We're currently at minus 6%, which means that on average, short-term Chainlink holders are minus 6% of their initial investment. And then if we look at the long-term Chainlink holders, they're currently, let's use it here. They're currently plus 26% up on their initial investment. However, it's sort of ways away from where we were or where we peaked during this rally, which is at about plus 150% and plus 113%. By the way, this image right here is something that I write about every now and again. This tendency for MVRV ratio to decline with each next bull cycle. The reason we see this for Bitcoin, for Ethereum, for a lot of different coins. The reason why I think this is the case is simply because the market is becoming more mature with every bull cycle. And even though there's a lot of degens, there's a lot of people hoping to get rich quick in the crypto market. On average, people are starting to exit the market, or they're starting to expect less of the market with each subsequent markets or bull cycle, and they're starting to take profits earlier than usual. So, for example, here in 2018, Chainlink's 365-day ratio has peaked at plus 533%. So, on average, all Chainlink holders that have acquired in Chainlink in the previous year were up plus 500% of their initial investment. So think about whether that sort of, like for example, here we have peaked at about plus 150%. Here we've peaked at about plus 200 and actually it was 300, I think. 342%. So with each subsequent bull cycle, there is somewhat a tendency for some coins to have a reduced MVRV ratio peak. So that's also
I think it's for all coins.
Yeah.
In each cycle, just people learn. You know, when you experience once this pain of naturalizing profits,
exactly,
or it's like similar. You relate your emotional experience. Every time you had bad experience, you expect it to happen, and it's in a crypto you should expect every top's followed by the bottom, and so it explains quite nicely human behavior. And for everyone, I think we track it's the same picture. Every cycle, big cycle, and we mean by big cycle, and where we will top earlier.
Yeah, pretty much. I mean, this is quite a big cycle, obviously. Have I shown net for profit loss? Same thing. Big dip here and here. Capitulation dips. A lot of coins moving at a significant loss relative to the last time they were acquired. And then, wow, look at that. A massive spike right before a correction. This is similar to here. And very often we see this around local tops for coins. I think if you look at MATIC, wasn't there a similar spike? Yeah, around at the all-time high, and also here before a correction, and every now and again. So what this means is that on average, the coins, Chainlink coins that were moving at this point in time were moving at a significant profit relative to the last time that they were acquired, the last time that they moved on the blockchain. So in a vacuum, that would indicate a sort of increased profit-taking activity. Now, obviously, I think that this metric works best for coins with a singular use case, or where most with coins whose entire use case is speculative in nature, because this metric assumes that all blockchain transfers are buys and sells, because it takes the price at which the coin was last moved and it just assumes that this was its buy price, and then the next time it moves, it assumes that this was its sell price. So for coins like Ethereum that have like a bajillion different use cases, it's difficult to use this metric to figure out whether people are taking profits or not. For coins like Bitcoin, it's much easier. I think for most coins, they're still like 80 to 90% speculative in nature. There's very little purported utility still in the crypto market, I think. So outside of DeFi, obviously. So I think given the fact that this spike in the Chainlink's profit taking or net profit loss came as it started to recover, I think it's a fairly safe assessment or assumption to make that this was indeed profit taking, and it sort of tanked the price of Chainlink in the short term. But overall, Chainlink's MVRV remains fairly low. There's a decline in sell side pressure. Its on-chain activity in terms of active addresses, I think it's still fairly high. Let's see. Yeah, it remains, it hovers at around this sort of 7K level, 7 to 10K level. I think from a fundamental or from a sort of on-chain perspective, there's not a whole lot of immediate red flags that I'm seeing. Obviously, we've only looked at 4 or 5 metrics. We haven't looked at behavior of different whales, different holder categories. We haven't looked at long-term holders and what they are doing, but there's just not enough time in the day. So if you want to talk more about our metrics, check out our Discord. There's a link in the description of this video. My handle is IBIS in our Discord. So ping me with any questions that you have. I'll be more than happy to answer them. Once again, first of all, thank you everyone for sticking by. There's more people now looking at the stream that there were like a half an hour ago, which is crazy because I've just been yapping on. Everything that I talked about today, plus literally 70 to 90 more metrics, are available on app.santiment.net. If you like this type of analysis, I know it can be very overwhelming. We get complaints that a lot of stuff that we talk about sometimes goes over people's heads because it's so comprehensive. Just stick with it for a couple of months. So usually people that get into our platform and commit themselves to understanding on-chain and social analysis, within 30 days they can do the same things that we do. And also we have a support group. Everybody that's a Sandbase Pro subscriber, there's a group in our Discord where we talk to them about what we think about the market. We answer their questions. We chat about different chart setups. So you're not alone. You're not going to be alone. So I hope at least some of this was insightful for you. I hope at least some of this was interesting to you. I'm sorry that you only had to listen to my horrible voice for the last hour and a half. Brian was unavailable today.
It's okay. It's not perfect. You mean because of Brian?
Yeah, because of Brian.
Nice LA accent.
LA accent. That's right. You had to listen to my Eastern European accent for the last hour and a half. I know. Thank you for
It's okay.
bearing
No,
with me.
it's not strong.
Yeah. Anyway, thank you, everyone. Last thing, if you wanna sort of start your journey with Sandbase Pro, use the code TWIC in the checkout, during the checkout. TWIC stands for This Week in Crypto. It will give you 25% off your first billing cycle, whether that's monthly or yearly, doesn't matter. You get 25% off. So it's only $49 a month anyway, which is by far, I think, the most affordable on-chain plus social data provider on the market. So yeah, if you have any suggestions how to improve this stream, sometimes it goes on for a little bit long. Sometimes people want us to go for longer. We get some contradictory feedback, but that's fine. Let us know in chat and let me know in Discord. Like I said, IBIS is my is my Discord handle. So just ping me, talk shit to me. Let me know what you liked, what you didn't like, and so we can improve for the next time. Anyway, thank you everyone for joining. I'll talk to you all in 7 days.
Thank you, everyone.
Thank you, guys.
Bye-bye.